Just showing you the world in my eyes, guys. That's all I do. I just show you my trade. We talk about them, and hopefully you're learning. And I think you are, man. Hey, for all those that email me and ask me questions, thank you for the feedback. And I hope through my videos and me telling my story, you're learning something. And hey, look, if you've never been to the channel and you like what we're doing here, subscribe to it. We do this every week, guys. And I even got guys that want me to do 2 and 3 videos a week, which I might do. Hey, look, today's video is all about the stock market's rocketing. And quite frankly, it's easy. It's easy to feel like you're missing out. But I don't want you to feel like you're missing out. I want you to feel like you have adopted a strategy for success. And all we do is print that money. Guys, you have to stay focused. Yeah, Amazon can run 100 points. Microsoft can run 7 points. But you know what? You don't have to feel down or a loser that you missed out on those opportunities. Hey, look, it's all about focusing on the trade that's in front of you. Make that trade the best trade in the world, and you're going to be successful. Because remember, when we do the covered call strategy, guys, we are looking to beat the stock market. See, guys can gloat that they're killing the market today. But at the end of the day, I've talked to those same cats that invested in Sun Micro, Cisco, and Intel when they were all trading at 90 bucks a share. And where were they when they were selling at $7 a share? Yeah, that's right. Losing money. With the covered call strategy, we can be successful, we can be disciplined, and just make the money. Make it flow like water so we can do this in retirement. I'm going to show you that I have eclipsed 36,000 this year, and man, my November is setting up for even more money. But guys, it's about a discipline, and it's about getting the experience. Hey, none of this is going to be beneficial to you if you don't step out, get yourself a little account, and just get your feet wet. But first, get your financial education, watch the videos, learn it so you can be confident. Now, hey, look, guys, I'm going to kick you over to my car session video. If you like the video, man, bang that like button, guys. It lets me know you like what I'm doing. And hey, until next time, well, I'll let him tell you. Hey, welcome back, everyone. It is time for another red-hot covered call car session video, guys. I'm on the road. I want to talk covered calls. And guys, today is just one of those days, man, where everybody's getting rich. You got companies like Amazon, Microsoft, Google kicking ass. But sometimes, guys, seems like you missed the boat. Hey, look, guys, today we're going to talk about the money emotions and just chasing stocks when you shouldn't be. Before I get going, man, this is going to be a short video, but if you like what we're doing, guys, I want you to subscribe to the channel. And hey, look, man, if you like this video today, bang that like button, guys. It lets me know you like what I'm doing. All right, guys, we're going to do a very short video. I am on the road, but man, doesn't it seem like everybody's making money, man? Everybody's getting rich. Who needs financial advice? Who needs YouTube, man, searching those little morsels of information to better our game? All you have to do is throw a dart to the money page and just pick a stock and you're making money, right? Well, guys, look, I have been here many times. And quite frankly, guys, I traded millions of dollars during the dot-com boom and bust. For a lot of you newbies that are experiencing this current bull run, and it's only been your experience, hey, look, man, you better be ready when it comes. Because, guys, whether you believe the deeper conspiracies of how big money trades the stock market, I will tell you this, guys, we live in an era of bubbles, and they will run it up and they will run it down. That's what they do, guys. That's how they make money. So we have to have our emotions in check, and we have to have a discipline, guys, and we have to know that that's coming. But look, guys, we ride it while we can. So look, so today I'm going to talk about 2 things that I did. I'm going to talk to you about my Whirlpool trade, and I'm going to talk to you about my Adobe trade. But guys, before we get there, definitely want to reiterate that what we can't do is get emotional and try to chase stocks that have had phenomenal runs. Hey, look, at the end of the day, guys, the way I approach my trading and investing these days, it's all about what's in front of me. Look, man, I can't invest in Apple at 85 pre-split like 5 years ago, okay? That's done and gone. I need to now focus on what's in front of me, and I need to make that trade the best trade I've ever made in my life, okay? I'm just like you. When I see an Amazon up $100, I see guys, I've owned Microsoft multiple times since you've been watching my channel. And I have my shares taken away. And I'm sitting here saying, man, I started doing that back in the 50s and 60s and 70s. And here we are, Microsoft's in the 80s. But guys, I don't feel bad. I don't feel bad at all, because my plan is simple. I have a discipline, guys. Cash on cash. I want to generate that 3 and 4 and 5% time after time, guys. And hey, look, I'm going to miss those phenomenal runs, right? We know that. When we write covered calls, we know we limit our upside, guys. Now, you know that we can sometimes not limit our upside. We can use exit strategies, buy our options back, write the next covered call. But you know, when Microsoft jumps $7 in a day, guys, I'm probably not going to buy those options back. I let my shares go. But guys, it's a part of a bigger plan and a bigger discipline. So again, before I talk to you about my 2 trades, I just want you to keep those emotions in check. Don't feel like a loser. Hey, I don't. Because guys, just as I've seen the stocks go up, I have seen them come down. Okay, I remember cats telling me, oh, Cisco, man, $90, it's cheap. And those some bitches rolled Cisco all the way down to $7 a share. So hey, what goes up will come down. Guys, you got to have your discipline. You got to have your emotions in check to deal with both the ups and downs. And hey, look, I'm going to tell you right now, as I get into this Friday, right, my watch list for stocks includes stocks that have rolled from $100 to $300. I don't sweat it. Okay, I don't sweat it, man, because what I do is try to focus on my trades and the trades that are in front of me, right? That's all I can focus on, right? So again, let that go. Let that go, man, because what I don't want you to do is start chasing now. See, now as stocks get overbought, I don't want you buying stocks that are overbought, because Wall Street knows, man, when they get overbought, they sell them off, and when they get oversold, they buy them up. Okay? Do your homework, guys. Do your homework. But let's talk real quick about the 2 trades, guys. You guys have been hitting me up about my Whirlpool trade, and hey, look, man, I appreciate the fact that you're worried about me and Whirlpool. Look, man, Whirlpool got hammered 20 points, guys. It fell from 185 down to 160. But guys, I've been here before. I've been there, done that. So don't feel for John L., okay? I am prepared for these moments, guys. Now, yeah, it sucks. It sucks that I had a couple covered calls out there, and quite frankly, I was in at 185, guys. Now I'm stuck with a stock that's at 161, and it sucks. But you know what? What do I tell you? We got to have a plan. We got to execute the plan. Now, guys, if you remember from my videos, I got stuck with shares at 180. I bought shares at 170. Cost basis about 173, 174 because of a cash secured put premium I collected. Wrote a couple covered calls, collected a dividend, and guys, I'm sitting at a cost basis of about 169. So I may have lost 20 points in a day, but at the end of the day, guys, it wasn't that bad. So now my plan is to let Whirlpool base, and I'm now going to look for a couple green days, and I'm probably going to write a nice juicy covered call about 10 points out. And if it works its way up, guys, I'll probably add to my cost basis by buying it back, buying those covered calls back, and writing the next covered call. And we're just going to play it, guys. If you remember my Whirlpool trade from a year ago, man, I bought at 185, and that sucker hit 149. Guys, I played it all the way down and all the way back up, made money, not much, but I did make money. And guys, that's where that experience comes in, okay? It's the experience, guys, that gets you from point A to point B. See, you could read a book or read articles and websites, but guys, it's the experience. It's feeling that kick in the nads of Whirlpool falling 20 points and me working through it, which gives me that experience needed, guys. And now, hey, I don't like the fact that it's fallen, and I go from being up a couple grand to now being down a couple grand, but guys, I'm not sweating it. Hey, look, finally on my Adobe trade. Now, I told you the story where I went to buy it, didn't get it, ended up buying it a little lower. Next day, rockets 18 points. It ends up from my purchase price of 148x to 175, guys. Well, hey, look, I told you that I was going to wait. I was then going to let Adobe base up here at about 175, and then I was going to write another covered call. I was going to write a covered call and just let it go. I was going to write a 180 strike, maybe collect $2. Man, wash the hands, I'm done. Beautiful trade. Well, guys, I did that. Today, with everybody rocketing higher, I knew Adobe would rocket higher too. And it did. It was up about $1.50, guys, and I wrote that 180 strike, man. I got 120 for it. But guys, as the afternoon went on, man, Adobe's rolling higher. So I wrote the covered call when Adobe was 176.34. I got $1.20 for it, guys. Later in the day, Adobe gets above 177, and I noticed I could buy that same option that I paid 120 for 150. Yes, 150. So when you do the math, I pay 150 to buy the obligation back, give back my 120. Guys, I only add 30 cents to my cost basis. Man, I took that off the table. Done. Now I have no obligation, and look at Adobe, man. It's going higher. Guys, the reason I did that is I think Adobe goes to 190. So in the end, guys, have a plan, execute the plan, and hey, don't feel like you're locked in to a plan. Hey, man, that Adobe trade, man, I was ready to end my day, move on. But the numbers were in front of me. I kept that trade in front of me, guys. And then I executed a quick exit strategy, added to my cost basis, but now it sets me up for an even better trade. Guys, that comes with experience. And the only way you get experience, guys, is open up that small account, put some money in it, do your homework and due diligence, and do it, guys. Hey, look, I do wish you the best of luck. And hey, I do hope you don't start chasing stocks, guys. Now, whether we go up or down from this point in the stock market, I'm not sure. But guys, focus on those trades that are in front of you and don't worry about all the noise around you. Because just as Amazon rocketed up 100 points, Chipotle was down 45 the other day. Hey, you get winners and losers in this market, guys. Just keep the ones in front of you the most important. That's all that matters. Hey, look, I hope you learned something from this, guys. And hey, look, until next time, I hope all your covered calls are profit.
All I see is signs. All I see is dollar signs.